time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And I'm just realizing I don't have my lights on, so give me 1 second. But we do have an interesting show. Hold on, I'm realizing this right now. Alright, now that I have my lights on, I can actually see myself, right? Okay, cool. Alrighty, good morning, everyone. Hope you're having a great day. Hope you're having a great start to your Monday. We are set up for a very, very, very interesting week upon us. Like I like to do on Mondays, we're going to roll through our Catalyst Watch as we like to do on Monday. But the big thing that we're watching this week, obviously, is FOMC. One thing I want to talk about before we get into the entire show is that when the SPY historically is sat within I believe 1 or 2% rate, a 1% or 2% range from its all-time high when the FOMC has cut rates. This is something I just read a little while ago, that 100% of the time within a year, the S&P has ended up higher, which I guess isn't really like that much of a massive predictor considering the S&P typically just goes up, right? Up and to the right because it's built of the 500 biggest companies, but it is kind of interesting to see. So that doesn't do anything for short term, which we're going to talk about as well. But let's get into what we need to keep our eyes on for the week. Today's actually going to be a pretty quiet day, all things considered, what we like to normally expect. We do have New York Fed inflation expectations today at 11 o'clock, and then Trump is going to speak today Trump participating in a roundtable, so, you know, that could be anything, but that's at 2 p.m. today. Outside of that, a pretty quiet start to our week. Looking forward to tomorrow, we do have a very important data point. We have JOLTS, so job openings tomorrow at 10 a.m. after market opens, so we're going to have to keep an eye on that. I will also be live tomorrow, more than likely, so we'll walk you through that live on the program. After that, it's also looking like a pretty quiet day. Heading into Wednesday, we have employment costs at 8:30 pre-market, and then if you're interested in mortgage rates, obviously have housing exposure, real estate. The 30-year mortgage rate is pre-market at 7 a.m., so you're going to want to keep an eye on that, see if that affects anything you may have exposure to. But most importantly, like we discussed earlier, FOMC is this Wednesday. The biggest thing that you should be keeping your eye out for, it's projected and expected to drop 25 basis points. We'll see what happens. I think we're going to get what's expected, but we'll see. You never know. So we'll see that. Right now we're seeing about 4%, so drop rates at 3.75, so a little bit better. Obviously, depending on what you think about that, there's an argument both ways. We're not going to get into that right now. But you obviously have that decision at 2 and then the conference at 2:30, which is the more important thing, especially if you're trading equities, on how the market reacts to what is said. Remember, the market's always forward-looking, so anything that hints at what the future could be is what you need to care about more than what it is right now, right? All right. After that, not too much. Again, another quiet Wednesday, albeit very big data point, and albeit on Tuesday, a quiet day outside of the big data point. So quiet days, and when I say quiet, I mean we don't have like 50 Fed speakers talking this week, which is really nice and a little refreshing. We do have the trade balance and jobless claims to watch out for pre-market on Thursday. But Thursday, again, looking like another quiet day, all things considered. You do have the 30-year bond at 1 o'clock. That will more than likely affect the market, so you're going to want to keep an eye on that. And rounding out the week with Friday, looks like we just have 1, 2, 3 Fed speakers, mostly in the morning. 2 pre-market, 1 Goolsbee at 10:35. So all in all, a quiet week, mainly outside of the 2 major days on Tuesday and Wednesday, those 2 big data points that will more than likely be where we'd see the most fluctuation. Good morning, Hatchet in the chat, and Eddie dropping the year. You know I got this for you, my friend. Drop the year right back to you. If you haven't already, guys, feel free to say what's up in the chat. I like to say what's up back. I always appreciate your precipitation. That's rain. Participation in the show. All right, so let's look at the SPY right now and take a peek at what last week looked like and what last week's daily candles look like, last week's weekly candles look like, and what they could spell going into the end of the week and the end of the year. So we actually saw a decent little consolidation before breaking higher on the SPY last week. However, we left a nasty wick here on the day on Friday for the SPY, essentially leaving a double top. We came just shy of that all-time high here, which high a day was 688.39. All-time high is about 60 cents higher or so. So just shy of that before coming back down and basically closing where we opened. A little bit minor change, 0.19%. And closing right around this LOI at 635.54. Now today we are gapping up, which is interesting considering that price action on Friday on higher volumes. That's showing an obvious level of rejection from those all-time highs. Now again, if you're thinking from a bear perspective, if you're going to take a short, you're going to take a short at the all-time high because your risk is very monitored there. You can put a stop in few pennies or whatever above all-time highs, and your risk is pretty low, all things considered. So this daily candle is kind of gross. It's not great, but I will say the weekly candle is looking much better. So we had 4 red candles drawing down from that all-time high tap. Big candle with Thanksgiving week, and then another candle here. Let's turn off my lines here and zoom in a little bit more. Another decent candle here, although we left that wick there on Friday, right? But still closing at, I believe, hold on, let me see. The close was 685.69 and 685. So, wait, what? 685.69. What was the open here? There we go, 685.67. So we did close 2 cents above the 11.7 weekly candle, which is a good sign for bullishness into the next week here. Just going from a weekly perspective, because you're closing over that significant resistance here, all things considered, because you basically back tested it the following week here with that high being 684.96 on the following week and then getting rejected lower. So interesting to see that we did close technically above that just by a penny or two. So the weekly outlook here actually isn't bad. This is actually looking pretty solid here on the weekly. The daily is questionable though. So that puts us in a weird position here. And obviously I'm seeing a lot of people talking about shorting the market and whatnot, where obviously you can make your money, but it's like, I believe I said this on the last show, it's like picking up pennies in front of a bulldozer. You want to be very careful if you're doing that, because the trend and the prevailing winds, as I like to call them, are still pushing bullish here, believe it or not. I saw actually some really good traders I respect last week lose a good amount of money because they were trying to short this, because again, 5 green candles in a row, 6 technically, and then that you never really got a cool down. Instead of a cool down, which I was even calling for some level of a pullback, right? But after 1 or 2 days, we saw we weren't getting that. We proceeded higher. So without getting that pull down, you actually instead got a consolidation at the highs, which is actually more bullish, all things considered. Now, depending on volume, price action, etc., depending on how deep you're looking in, what your time frame is, your opinions can vary. But looking at for this week specifically, obviously we have 2 massive data points with FOMC and with JOLTS tomorrow. So it's hard to say with any degree of certainty. What I will say is I strongly doubt that we break all-time highs before Wednesday. I think what would make the most sense is that we see some non-action today. So we are gapped up a little bit here, but nothing too crazy, up about, a point on SPY. But basically some non-action where we kind of form like a doji-ish candle. We go up, we come down, but we kind of close around the same price, somewhere in this like 685-ish neighborhood, right? 685, 686-ish, somewhere in there. Tomorrow, I'm not saying I'm predicting jolts, but I would like to see a bear day come down and sweep all the way down to like 680-ish, right? That gives us that POC tap. That gets us back at the bottom of that consolidation range. And then Wednesday, assuming things are expected, which we hit that 25-point basis cut, and that the press conference, because that's the important part, nothing shocks or surprises the market. That's what we need as the catalyst to push off of that 680 tap, break all-time highs, and then rally into the end of the year. So that's kind of what I'm feeling out. Now, we have that thesis is based off of 2 things that I can't predict. I can say if this, then this with the interest rate decision. However, it doesn't really hold much value considering Powell can sound extremely dovish or extremely hawkish, and that's going to change the entire outlook on the SPY and the overall market, obviously. So what I would heavily suggest you consider going into this week is having an open mind, because there is an argument here both ways for bulls and bears. There definitely is. And I think not getting trapped in your bias would be the smart way to go about approaching this market in these conditions where we might flip back and forth here for a few days. And you need to be open to not say, oh, we're driving price all the way down to 600 or we're rallying all the way to 770, right? I think it's the more prudent decision here would be to be a little bit more cautious in the short term so that you get the longer term trend correct. Because again, I want to reiterate, there is a good argument both ways here for bulls and bears at this current price on the S&P 500, at least in my opinion. So you don't really want to put too much of your money either which way on the market until you have a stronger decision made on the market, at least in my opinion. Now, we are noticing that the VIX came up a bit, and right now at 1627. After sweeping low to that, well, let's go to the daily here. We reached a low on last Friday of 1528 and then popped up a little bit from that point here. Makes sense that we're going to see, even if the market goes up, this could be one of those scenarios which is why I say volatility and the stock market are not a one-to-one a relationship. Not always. It is strongly correlated, like an 80% of the time, but there are times where volatility goes up and the market goes up, and volatility goes down and the market goes down, right? So this is one of those times where the market could actually proceed to the upside with volatility going up due to the next 2 days of potential price action that the market is starting to bake in some level of volatility, which when you think about it, that makes a lot of logical sense, obviously. So keep that in the back of your head. All right, so right now we're going to be sitting around this 680, 670-ish area, which is a 200 MA on the pre-market here. So we'll see how we check in at market open. We're also going to swing around to the Qs, to IWM, and we'll run through all the Mag 7 names as well right after we get into the market open. So let's get ready for that right now.
The market is about to open. It's time to start the day.
Alrighty, it's looking like we're going to open underneath that 200 MA, at least in the pre-market here on the SPY, but expect a pretty volatile open. We're also going to keep an eye on our 0-day contracts here to get an idea of what short-term volatility is looking like. Market has now opened, and like I just said, we are opening underneath that 200 MA on the pre-market, so just expect a little bit more volatility here on the open. It's also a Monday morning, which makes a lot of sense. Let's see what we're opening right now in zero. Volatility is actually pretty calm. So our 0 DTE volatility for a Monday open is pretty low, all things considered. Rolling 52-week IV right now on 0 DTE options is about 15%, or that's your average IV, excuse me. And your 0 DTE volatility right now, obviously we're opening and fluctuating somewhere in the neighborhood of 16 to 17%. In general. Notice that your calls also have higher IV comparative to your puts, which is interesting to see on the open here. But either way, we're looking at roughly 16 to 17%. So IV is a little elevated, which makes sense. It's open. IV percentile right now sitting at 17% and HV percentile near 54. So this insinuates that the market is actually calmer than it normally is. HV percentile is suggesting a tiny bit of volatility, while IV percentile is signaling to us with at least a 83% certainty that the options market is calmer than it has been in the last 52 weeks, at least for the S&P 500, which is interesting to see as we're near all-time highs. That's the kind of thing you want to see. You want to see IV percentile come down as you push higher. It should give you more, if you're a bull, more confidence to the upside. But again, that's only one piece of the puzzle, right? We got to put it all together for it to make sense. HR in the chat, dropping the AO. AO, my friend. Hope you're having a great day. Guys, if you haven't already, do me a quick favor. Market just opened. We're going to get into some things here. But if you haven't already, do me a favor. Interact with the stream in your favorite way. You guys like to talk in the chat. I love to talk back. So feel free to drop a message in the chat. But if you haven't already, drop a like on the stream wherever you're watching, whether it's YouTube, X, Instagram, Twitch, or Kick. And most importantly, if you haven't already, pop over to the YouTube channel. Hit that subscribe button once we get to 500 subscribers. This will be an everyday show. So if you like the content, you want to see more of it, pop over to YouTube, hit that subscribe button, and I appreciate your support as always. All right, SPY getting a little bit of a dump here on the open, but nothing too crazy. I know this looks a little dramatic because we're very zoomed in, but all things considered, if we're looking at this pre-market high, we're only down about $1. Well, this pre-market high, not this one. And even then, still about $1. So really nothing to see here just yet. That pre-market gap is down here around 686, which we're very close to. And that pre-market low is right around here around low 686 as well. So and there you go. We filled the pre-market gap, which isn't a thing. I'm just making a point of saying that. But we broke the lows, looking like we're getting a little bit of a reaction here at least. So we'll see how this happens or what boils out here on the market. I want you also to notice the RSP has gone red on the day while we're looking at green Qs, getting a rally here. And IWM, still green, but leading the downward pressure, I guess I should say, all things considered. Well, I would say RSP is technically, but a little lower liquidity, hard to judge, right? But we are seeing that clean divergence once again, and this is something you have to keep in the back of your head, especially while trading this market right now, is that you're going to see the Qs and IWM flip-flop back and forth on who has the strength, who has the weakness, and so far it's looking like the Qs are going to pick up the ball and run with it today, but IWM honestly doesn't look bad. It has gapped up, right? You're up about $1.40 on the open, still up 0.53%. Let me put my lines back on here, and you're near that all-time high. All-time high at 252.77. So you're very close to that. Broke it in the pre-market, wicked it here after the 1 minute. So I would watch this level. It's going to be a very key level. Will it break today? Maybe. Could. Definitely could. You're not far off from it. What I would prefer to see is chop in here, though. Let it cool off because it's actually been way stronger than the SPY, right? And the Qs. This has been the monster. Let it cool in this range for a day or two. Let's wait for FOMC and then break it if I'm a bull. I would prefer that because it lets this stronger move cool down, build some level of consolidation, a base here near all-time high before breaking and running. Yeah, but if it breaks today, I won't be mad either. It'll be great. Right now, VIX is over that 1637 spot that I got here on my chart. So right now, we're sitting in between this little chop range here, 1637, 1653. And again, I will remind you, as of last Monday, I strongly believe that, 1818, I believe. Let's go back. I think it was 1818, is going to be the high for the VIX until the end of the year. Where are we? 1833, right? 12.1? Yes, 12.1. So the Monday high on volatility last week is going to be your high for volatility through to the end of the year. Pretty confident on that. Now, if there was more volatility, it would have happened last week where bears had a clear opportunity to pull it down. Could still happen this week with those two more important catalysts. If it doesn't happen tomorrow or Wednesday, volatility is definitely getting crushed to the end of the year, or at least I should say comfortably sitting south 16. I would feel that would be more prevalent. Now, something to keep in mind. Because of how volatility is moving here, we could technically go into backwardation, and this is something I've talked about. If you don't know what I'm talking about, feel free to check out the video on my channel about backwardation in contango. We could slip into backwardation this week because of those shorter-term more volatile moves. It's possible that we could slip into backwardation this week. So just keep that in the back of your head. It's not necessarily a bad thing, and it would make logical sense if that does happen. But that is a possibility, especially with how much volatility has pulled down recently. To get a shorter spike in the near term could happen. So you want to keep that in the back of your mind. Watch those different VIX contracts I've brought up on the channel. You can search CBOE VIX contracts and see all the spot prices. And I'll let you know if you're in backwardation or contango. VVIX up a little bit here, but again, you're south of 95. It's still very bullish for your volatility of volatility. Let's take a peek at the Mag 7 names, then we'll swing over to our sectors here and get rocking and rolling. I'm really liking NVIDIA here still. The big level to watch here on NVIDIA is going to be around 187.22. So about $3, really $2 north of here. You've got about three different levels of resistance here. Most importantly, this LOI at 186.21. Over that price puts this red SAR in play and puts the 50 MA in play. You break over all those three levels. This, especially with how the MACD is sitting, the RSI, because we swept those strong monthly lows, or I should really say weekly lows. Yeah, weekly lows here. You swept them and closed above. This is going to pop and rally into the end of the year. I'm very confident of it. If and only if, this is your qualifier, if and only if we get a daily close above 187.22. So take that with a grain of salt. If we get a close above 187.22 on NVIDIA, a daily close, then it will more than likely rally into the end of the year at least to 195.62, at least in my opinion. Looking at Google here, doing more of what I said it was and have been saying, probably going to sit sideways here. We got a green week technically last week. I'm looking for this kind of price action, or even this kind of price action here, where it consolidates for a week or two before going again. It's done that now. This would be the third time. So part of me thinks that it should pull down even lower. However, the reason, and I made a video on this rally down here that we saw had nothing to do with the bigger rally that we're seeing recently, the more aggressive upward rally, where I believe, and again, there's a video on my channel if you missed it, that the market was, prior to this point in time, underpricing and underevaluating Gemini. And now with Gemini 3 out, and they're seeing how versatile and how strong this program really is, are baking in more evaluation here. Sitting up here, it probably should build a longer term base, but if you're a momentum trader, you're going to want to look for 2 to 3 weeks of some level of consolidation before another break and push higher. And in my opinion, I do think it's just going to sit north of 300, south of 320 for the foreseeable future, I guess I should say. It needs to cool down a bit. This is a fantastic move, $100, a 30% increase essentially from old all-time highs here to where it currently is, which is remarkable. It's very, very, very crazy, and especially in such a short period of time, especially if you're a bull options trader. This is a little different for you, but if you're a bull investor, you want this to cool down. You want price to get comfortable in a new range after it's sharply climbed so much, to get comfortable up here before going again, right? So that's what I'm sort of looking for here, Google. Basically for it to sit north of 300, sit south of 320. Maybe if you want to extend it to 330 or all-time high, just got to chop around in here for a little bit. Let all your EMAs and MAs catch up. Let the move cool down. Where it's not necessarily bearish, you're just building out a brand new range. You're building out a base before it could potentially go higher, or at that point offer a retracement discount down to around 250. But for the foreseeable future, I think we're going to see Google kind of ping pong around 300 to 320-ish. I'm looking at Microsoft here. I've talked about Microsoft quite a bit here. This is the weekly chart, and it is not to be trusted still. Do not trust Microsoft unless it's over like 495. Both directions. I would not trust how Microsoft is sitting as a bull, as a bear. You've got very mixed signals here both ways. I would be very careful. Oh, Eddie dropping Path in the chat. Something happened crazy. Woo! Path, a new 52-week high, up 5%. If you guys don't know, I'm pretty sure I mentioned on the program a few times, I'm long Path shares and options and some leaps. So Path is making a nice move here. Also, Core is making a decent little, well, tapped that 50 MA, but looking pretty good. But yeah, Path making a nice little push here. Wow, good for Path. Honestly, after Friday's price action, I was thinking we were going to sit here a little bit more, but hey, I will take the move. No shame in that at all. Let's pop back to where we were. Toby, good morning, my friend. Thank you for dropping the yo in the chat. Yo to yourself, my friend. But yeah, Microsoft, I wouldn't put too much stock in at this current juncture. I would just... there's better things to trade. As a bull, as a bear, regardless on which way you like to play the market, I think there's better things to trade, and you want to be a little bit more careful if you are looking or interested in trading in Microsoft. I just would, if you could avoid it, avoid it. At least that's me. Just because it's really a no-win either direction for me. In this current price, it's not a winning condition. Meta is a very similar... In fact, Meta is a short here. If tomorrow and Wednesday FOMC decisions are at least perceived negatively, bearishly, if you're looking to short anything Mag 7 related, Meta is a short here. This is a short. I am tempted to short it right now because of this daily chart. The weekly looks a lot better, and the weekly could be explosive. So you'd want to wait for Wednesday for confirmation. This is one of those cases where I'd rather be late to the party, as I like to say. I'd rather show up late to the party and to the right house than show up to the wrong house and get blasted in the face with a shotgun. That's meta here. This is a decent, extremely solid short opportunity. You've got this resistance here from the earnings gap. You've got the 200 MA here, the 50 MA here. You're burnt out. Well, not burnt out, but you've got a strong rally here in the short term, which may need some level of retracement here, bare minimum down to these two LOIs here at 652.38 and 643.43. And if that cracks outside of POC, this more than likely is going back to that 600s, and where my long target is 550 on Meta. Very volatile name recently, so keep that in the back of your head. And to be very clear, unless I'm day trading it, I do not want exposure to this name yet. Post Wednesday, if we do see a push to the downside, then that would be where I'm interested. Now, I will say in the same breath that there could be short-term opportunity here looking at the weekly. Obviously, we've got this gap to fill. Sometimes there's things I like to call bull bait and bear bait. And we kind of got it both ways here. You got a gap here to the downside, and you got a bigger gap, the earnings gap, to the upside. So there's bull bait and bear bait in the same direction here. There's both opportunities here, as the daily looks like it could be a short, while the weekly looks like it could be a long. You could get some level of recovery here. Pop the 21 EMA on the weekly. You're already over the 50 EMA. Break the red star. Rally to the upside back to that old gap at 708.02 for solid 30-plus points here. It's worth it. So this is a name I would just keep on watch both directions, especially if it shops and has like two inside bars here. But if it shops north of 660, yeah, we'll call 660, and south of basically the high of this candle, 680. So 660, 680, it gives you about 20-point range, right? If you're sitting in there by Tuesday and Wednesday, you're going to want to watch this like a hawk. This is a name that's going to offer you opportunity in either direction. So watch that very closely, in my opinion. I think Meta could offer you a solid trade either way, depending on how data rolls out this week. Apple, how are we looking on Apple? Left a nasty wick like the market last week. It's okay. You're looking like you're going to come down to this range around this like 276-ish area. This is kind of a no-go either way for me. In fact, this could be a short too, but I wouldn't short it now. You could short it on like a 276.50 break. There's not a lot of meat on that bone, and you'd be shorting into a decent area of consolidation here, which tends to be some level of support or strength. So unless you're day trading, I probably wouldn't even touch Apple here. Again, day trading is a different conversation, but I'm talking more like short-term swing trading. Apple's a little iffy here. Toby said, I missed the Catalyst watch. Shame on me. Are jolts tomorrow high priority for you too? Yes. So yeah, the big thing, I'll just give you a quick summary, and then for anyone else who came in late, because I see my viewers have gone up quite a bit since market open. The big watch for this week, we man, I can't talk today. New York Fed inflation. I don't know, I can't say that right now. Expectations today at 11. Trump participating in a round table at 2. That's today. Tomorrow, jolts at 10. That's your big one. Wednesday, FOMC, and then the meeting afterwards. Obviously, the meeting more important than FOMC for narrative, of course. Jobless claims on Thursday morning. And the 30-year, somewhere's in here too. The 30-year on Thursday. And then Friday, you got 2 Fed speakers. And next week we have CPI. So just keep that in mind. So yeah, the big days this week, Tuesday and Wednesday for sure. So definitely keep an eye on those days. Tesla here. You know, a lot of these Mag 7 names after, especially the recent price action, are looking a little, like not bad, but not like, I like to look for shorter term swing opportunities. Like obviously I day trade, but the day trading works better when the daily charts and the weekly charts support the thesis, of course. So I need to see a little bit more support here. I need to see a little bit more confidence here. What would be great on Tesla, and you guys saw me try to play the 433.31 break. I was a day early, $1 short, because the next day it popped hard and rallied until the end of the week. So that sucks. It is what it is. But look for some level of retracement this week, holding the 8 EMA support, or if it comes back and retests, and I would prefer if this happened, if it came back and retests 433.31 and held, that would be a solid bounce to play in my opinion here. The daily is a little shaky, the weekly is a little shaky, but if we do see bearishness in the market, there could be an opportunity there, especially for a day trade. Bare minimum a day trade, but if you want to ride something to the end of the year, again, depending on how volume and candles play out the next few days, be something to reevaluate. It's not horrible by any means. I definitely wouldn't short it yet. If you're looking to short it, you're going to want it to be cleanly under 430 before even thinking about shorting, at least in my opinion. Amazon's been a nutter lately, right? It has been a nutter. We had earnings, hard move on earnings, gave it all back essentially. Was a famously, as I set this alert here, as you can see on my chart, 214.90. The low for that alert to fire was 215.18. So I was 28 cents off my alert firing, and I'm still sour about it because that would have been a great long to get in, capture however many points, right? 215 all the way to would have captured 20 plus points, 25 points on that rally, assuming, low to high. But even if I captured half of that, beautiful. Anyway, very indecisive here. Hard move down, about a little bit more than a 50% retracement. As you can see, I got my little fib retracement here. Closed essentially on a 50% retracement after wicking higher. And now you're sitting on the GP. So the golden pocket here, between 227.68 and 229.20, currently trading above the GP as we wicked it 2 days in a row. You are under the short-term EMAs. You're above the 50 MA and obviously above the 200 MA down here. This would indicate to me that long-term trend still remains intact and is bullish on Amazon, assuming that we see the GP continue to hold here. With how MACD is sitting, it's looking like we could get a potential reversal here. RSI is a little low, as you guys, I like to tell you guys, I use it as more of a momentum indicator, not a overbought, oversold. And it's a little bit lower than I like for it to be before getting too excited. The weekly chart, on the other hand, it's reiterating the same thing on the daily, essentially, where we had a hard move up, obviously coming back down, and now finding some level of a base here. This is another name. I'll put that in the same neighborhood as Meta in terms of Mag 7 opportunity names, where this could get a hard pop and rally through the end of the year, assuming it holds this spot. If you're an equity trader, I think you could feel pretty safe, and I would say extending the risk a little bit lower to the downside here, maybe to the low of this candle here, 226.80. So putting a stop on around 226.80 on Amazon and going for a long here. Honestly, you could even do it today if you're equity. Options may need a little bit more tact, right? Because you could get a push today, but your short-term trend is leaning you bearish while your long-term trend is still saying bullish. So obviously, depending on how much time you're taking on your contracts, that's something to consider. This is a better equity play, in my opinion, from where it's currently sitting, mainly due to the potential hard move that we could get with the data points this week. So I would take that with a grain of salt, either which way. Now, as an options trader, I would look for the opportunity to enter lower. So somewhere in the GP, I would look for that opportunity if I was an options trader. With time, ideally look to go more risk-free or at least realize some profit before the end of the day today, if you're looking to day trade today, or at least before Wednesday to cushion any potential loss there if we do see a downward push here. And again, buying more time in this scenario would be very prudent because it gives you the extra buffer. So maybe this would be one of those trades where you want to go much closer to the money. And kind of create like a synthetic long position, or even in the money if you want to be that safe and create a synthetic long position, and play it that way where you're de-risking a little bit, but you're still taking a little bit more risk than equity. So obviously, depending on how much money you have, that could be something you want to consider. The only thing I would not consider here is a strangle. A strangle, you're going to need at least a 5-point move on the weekly. Could it happen? I think it could. But again, a 5-point move is not even going to get you profit. That's just going to break you even if you opened it today. Now, that could be a different conversation on Wednesday. But a 5-point move here, again, puts you somewhere around here, 225, which would break that low. And it may have more downside, so that could really work. And a 5-point move here would put you north of right around the 50% retracement here, which we had a clean rejection of. So if there's no momentum on that, a strangle you could lose some money on. So unless that gets a little cheaper by Wednesday, which it could, I definitely would stay away from a strangle on Amazon, at least where it's sitting. So there's a few ways you could play this, and I'm just outlining this for you guys. That way you have an idea on how you could potentially play Amazon going into this week. Guys, I'm going to give you as much information as I can, but I did have an emergency come up, and I'm going to have to cut the stream probably in like 9 minutes. So if you do have any questions or anything, please feel free to drop them in the chat. I'm going to have to cut things out of here pretty soon. But I'm trying to give you guys as much actionable information right now that you can actually use today and maybe this week, which is kind of my goal because I got wind of this like right before I went live. So that's kind of my goal here, to try to give you guys as much information as I can. I just simply can't be in front of my monitor like right around 10 o'clock. I gotta go. So if you have questions or anything you want to know, feel free to drop them in the chat right now. And if you haven't already, do me a quick favor, like the stream, help support the show. I really appreciate it. We should be live again tomorrow. I'm not going anywhere yet. You got a few more minutes with me. Should be live again tomorrow. If not, I will let you know. Make sure you follow me on my X account over there, or it's got a little Twitter bird, but follow me on my X. That's where you're going to get all my updates of when I'm going to go live. Hopefully, fingers crossed, in about a week or two, I can give you guys more of a definitive schedule. But I don't want to make promises to you guys and not follow through on them, of course. So if I tell you I'm going to be live, I will always be live, unless I, God forbid, get into a crazy car accident or something. But I will always be live. I'm telling you I'll be live. So I don't like to make promises and not follow through on. Is the emergency that your wife is mad about the canned chicken soup? Yeah, if you don't follow me on X, you don't know what Toby's talking about, but it's not. It's cream of chicken, Toby, okay? It's grosser than that. It's cream of chicken. It's not chicken noodle soup or anything. It is just cream of chicken. I don't know if you've had cream of chicken, Toby, because I know, Toby, you're overseas. So any of you guys watching that are not in the U.S., you probably don't even have the abomination that is cream of chicken. If you didn't know, you cannot cream a chicken. I mean, I guess you could, but you really can't make cream out of chicken, right? It is a marvel of recent time food, American food disgustingness. It doesn't taste awful. It's kind of gross. The thought of it is gross in general. But no, that is not why. But thank you for asking. Let's just scroll through let's go through our sectors so I can give you guys some info there. And then we'll look at some names I've talked about on the program before, and kind of we'll wrap it up there. So actually, real quick, NVIDIA did just break to the downside. Here's my alert here, but watch this 183.30 spot. We broke it on the open. I will continue to tell you guys, if you don't have this line on your chart, put it on your chart. This is a strong weekly support and resistance spot. You need to have this on your chart. Put it very simple with you. Above it, you're more bullish. Below it, you're more bearish. That cut and dry. Obviously, it's not like that intraday, but that's kind of how the market is reacting to this very key weekly level on NVIDIA. So make sure you add that if you haven't. 183.30 is very important. RSP getting a little bit of a rebound here. SPY getting a little bit of a rebound here. The Qs, after pushing up on the open, decided to move down a little bit, and conversely, kind of got on the same page with IWM. IWM was more bearish on the open, now trying to curl up, making a little bit of a cup sort of look here. Qs are not supporting that narrative, but looking like we're trying to get somewhat on the same page here. We went for a heartbeat there above that key LOI on the VIX as I gave you this range right at open. So we're still chopping in this range, actually right now testing the lower bounds of that range. Watch this break and a push to the downside for potential upside on the market. I do think VIX is going to kind of just flop around this range today. And as I said at market open, it would support a logical thesis on the day that we kind of go nowhere today. And then hopefully tomorrow we see downside, and then Wednesday we get big upside. That would be, in a perfect world, what I'd want to see for the market going into the end of the year. Of course, we're planning on events that I have no control over and know what Powell's going to say, because he could say he's going to do something no one ever expected, and the market goes up or down based off that. So we can just say what we'd like to see. And based on where we're sitting, that's what would make the most logical sense based on price action and volume. But sometimes we get surprises, so we plan for surprises when we can. Anyway, sectors, real quick. Multiple red sectors today. XLK, so your tech actually still doing a lot of the heavy lifting despite the Qs being down, obviously so green on the day. But a pretty bloody day, all things considered. XLU down, XLE down and recovering, right? So let's look at the trend here. Let's not just say it's down. The utilities are down and still proceeding lower. Consumer staples have moved down, trying to get a rebound here. So keep an eye on that. You might see some strength come in if we can get a little bit of a pop here. XLK was strong on the open, gapped up on the open, now trending lower. Real estate coming down and basing lower, not a good look. Materials trying to reverse, not bad. Industrials shot down and quick rebound, actually above its open price, now green on the day. So industrials looking like it's finding some strength. Healthcare, bad open, sharp move down, consolidating, looking like it's going to leg down again here. Financials, not bad. Move down, kind of double bottom look and recovering here, so that looks pretty solid. Consumer discretionary, gap down and holding like mid-range, so indecisive. And your comm services actually opened higher, lost it all and trying to gain it back. So mixed bag on all fronts, which kind of supports my narrative here on what I'm looking at for the SPY. A very, very mixed bag on the open here today. Nothing too exciting. And sometimes, guys, it's going to be like that when you're trading. You're going to be looking at things and sometimes things look great and sometimes there's not a lot of opportunity, and that's kind of what it is, unfortunately. Let's take a peek here at Path because we brought that up earlier. Nice little rally here on the open, shot back down with most of the market. This is going to have a hard time continuing to rally here without the support of the general market, the overall market. I would keep an eye on this one. I did realize a good chunk of profits on Friday for what it's worth, mainly because we're at that 52-week high. If we have a candle like this today, I'm not feeling too hot about it, at least in the short term, right? That we would realistically need some level of a cool down here to like high 16s would make a lot of sense here in the most bullish scenario on Path. So that's not me necessarily being a bear. I'm still going to have a position, but let's be real. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green candles in a row with an earnings pump. It's a lot. Like, it's a lot. And you came from 1236. I don't even know how much that is off the top of my head. Let's just do a quick little measure. You got 60% gain on equity in 17 days. It's a big move. So be realistic. All right, real quick, guys. Anything last minute things in the chat? I'm just going to flip through some things. But if you have anything last minute, feel free to drop it in the chat. I cannot go on a tirade or a diatribe because I do not have the time. But I will be live again tomorrow as long as a lightning bolt doesn't strike me down or anything happens during the day. Toby says, what do you think about ONDS with a little more consolidation on the daily? All right, let's do ONDS real quick. ONDS, lightning round. Okay, ONDS, this is a wireless drone company. Okay, cool. Looking at the daily chart, it looks okay. Not bad, not great. Let's look at the weekly. Weekly looks a lot better. Had a hard push up, came back down. Let's do a quick and dirty fib retrace. It's not going to be perfect, but let's go like this. Bada bing, bada boom. Came back down, basically almost wicked the GP here, which if I did that properly, maybe that would be accurate, but came down to around the GP on the weekly, rallied back up, sitting around that 23 or 0.236 retracement here on the weekly. Not bad. You also have the weekly red star here that could offer, let's delete that now. So weekly star that could offer some opportunity. Looking at the daily chart right now, it's got some momentum to the upside here, breaking above all of its short-term EMAs and MAs here. It does have the 5th green day in a row right now and entering some lofty areas where it didn't find a lot of strength. I would personally wait for it to break above the high of this candle, 963. To see if there's any continuation to the upside here, which ironically, even before I did that, the high of the day today on this name was 959, so very close. So watch 963 kind of like as your trigger here if there's going to be more upside. If I'm a betting man, this name comes down as long as it stays north of 807, basically a range of 807 to 832. On a cool down, you could have an opportunity there. I would watch volume very closely, as this is one of those names that's affected very heavily by volume. Had a strong reaction off earnings, which is more than likely contributing to the rally here. But I do think it needs to come down and cool a little bit. The most bullish scenario, you drop about $1 to 830. That would be a more advantageous time to enter the long. The daily's not going to look the best at that point. The daily might look like it needs to cool longer, which it may, so it may shop around in that range. However, the weekly does offer a good setup here, assuming, here's the key words here, assuming it holds that like 803 to 830 spot. If it fails that spot, you could have a little bit of a deeper pull down and deeper contrition back to this general area here, around like 750. So with options, not a bad move if you buy enough time with it, depending on when you're striking everything. With equity, same kind of argument, honestly. As long as I wouldn't do short-term options at this juncture unless it breaks 963 and you're trading momentum to the upside, or you wait for that down, if there is a downturn here, short-term. And even then, if there's a downturn, it may need to chop around here, so I'd be very careful on short-term options here. And you probably are going to have more money to be made on a name like this on longer-term options, because if it does consolidate here, like I'm saying, theorizing is a reality here, it breaks this level and runs, you're probably going to make a lot more money with your longer term contracts and feel less stressed out than shorter term contracts. Okay, guys, that's going to wrap it up for the show today. Hope you guys have a great rest of your day. I'm sorry to cut it short. I don't like to do it to you, but I have to because I have to tend to a few things. You guys know what to watch on the SPY today. I'd be very cautious in general. We're more than likely going to shop around here on the day, so just if you're picking individual names, pick wisely, and don't shoot for the moon today. Meaning, if you have a good gain, anything north of like 20 to 30%, as long as it's not like a 0-day option, right? That's a different scenario. But if you're trading any options, you're north of like 20%, probably take it, slap a stop on, be a little bit smarter, and a little bit more conservative today in general as you trade throughout the day. Anyway, guys, hope you have a great day. Hope you trade smart. Again, I will be live tomorrow at 9:15. So if you like the show today, feel free to pop by again tomorrow. Before you leave, do me a favor, drop a like on the stream. And as always, some will say you need an edge to trade. While I like to look at things from a different angle, that's always what you get right here on the Atomcash angle. Have a great rest of your day, guys. And remember, precision beats prediction every damn time. I will see you tomorrow at 9:15.
The time has passed, and that's a wrap.